Ahmed Ismail is among millions of Sudanese who is desperate to leave the country. He has been searching for a way to exchange his Sudanese pounds to the US dollar so he can buy a ticket to flee to Oman.
The rate is really high, and yet it's rare to find it. We're suffering even when we want to leave.
Since the conflict erupted between Sudan's army and the rival Rapid Support Forces nearly a year ago, about 8 million Sudanese have been internally displaced. Some 1.5 million of them have crossed into neighboring countries. The weakness of the local currency is making it harder for people to escape. Whatever little they had before, now not able to stretch as far.
The exchange rate of $1 has jumped from 500 Sudanese pounds to 1,300 since the conflict started. That devaluation has also been fueled by a rising demand for the dollar as more and more citizens queue up to leave the country.
Sudan's state-run statistics agency hasn't published inflation data since early 2023. Authorities said the consumer price index was 63% in February 2023. The World Food Programme expects inflation to have climbed above 300% this month.
Military war obligations, which must be paid in hard currency, are increasing daily and contribute to the exchange rate problem the country faces.
The finance minister also said state revenues have fallen more than 80%. The crisis has also been compounded by blocked trade routes. Some 60% of the routes are impassable, leading to lower movement of goods for a country that is largely reliant on gold, cattle, sesame, and grains exports.
The halted exports have resulted in a slowdown in the income of foreign currencies. The war and high expenditure on it is also contributing to this downturn. The government needs urgent solutions to prevent a collapse.
Sudan's economy has been hit hard by the ongoing conflict, contracting 40% last year, with more slowdown expected in 2024, likely worsening an already bad situation. Naba Muhiddin, CGTN, for Sudan.